Question number 30. Next two questions. We will learn preparation of both P&L as well as balance sheet. Mark both questions as important. Preparation of P&L as well as balance sheet. Question 30. From the following data, prepare P&L and balance sheet. Current ratio given, quick ratio given, 1.3:1. That's how we should read. Fixed asset to proprietary fund is 0.6. What is proprietary fund? Share capital plus reserves and surplus, basically shareholders fund. Next, gross profit 10% on sale. Collection period 40 days. This is used for debtors. Sales is given. By the way, today we have to do P&L. Therefore, we need sales as well. We need GP. We have to fill trading account and then go to P&L account. Working capital 1,20,000. This is the difference between current asset and current liability. Bank overdraft is a current liability. It's not a bank loan, not debenture. Overdraft is a short-term liability. Share capital given 2.5 lakh. Closing stock is underlined 10% more than opening stock. 10% more than opening stock. Net profit is 10% of proprietary fund. So the question is to prepare both P&L and balance sheet. So we will first write the format of P&L and then format of balance sheet. I think couple of numbers are directly available. I can fill sales, I can fill bank OD, I can fill share capital, and GP is given. So sales done, GP done, I can fill CO, GS. With that, trading account will be ready, and then GP I'll transfer to P&L. From there I can continue one by one. Yes, let us start. First, heading trading and P&L account. Debit side, credit side, particulars amount. I'll first fill the available data. Go to credit sales, credit side, by sales, $7,30,000 I can fill. Is there anything that can be directly filled in trading P&L? GP given 10%. Leave one or two lines and then write to gross profit 10% of 7,30,000, 73,000. Don't write anything. This will be the total, and here I can write by GP 73,000. Is there anything that I can fill in trading P&L? Working capital is current asset minus current liability. That won't come here. Bank OD will not come. Share capital, no, not in P&L. Closing stock is 10% more than opening stock. Now for this to be filled, I should know either opening stock or closing stock. From sales, if I take out GP, I will only get to know cost of goods sold. But that is not enough because I still don't know even purchase. Able to understand? Therefore, though I have some information, I can't fill anything as of now. What else? Then they said net profit is 10% of proprietary fund. Now proprietary fund is share capital plus reserve. That will come in balance sheet. So without that, I can't even fill net profit. So with available data, this is all that I can do in trading P&L account. I'll leave another 5 lines to complete my P&L account. This will end with net profit I don't know as of now. I'll keep it blank. Any P&L balance sheet preparation question, ensure first you copy the format and fill the data that is already available. Then only do working notes. Now start with balance sheet. Liabilities amount in rupees. Assets amount in rupees. Go to the question. Is there any number that can be directly filled? Share capital 2,50,000. Liability side, first item. What else I can? There is working capital information, but I can't write working capital in balance sheet. It's a difference between current asset and current liability. As of now, I don't know current asset. I don't know current liability. This information I will use later, but can't be filled in balance sheet as of now. Bank OD I can write. It's what current liability. So leave 2-3 lines and then write bank OD 15,000 rupee comes under the category of current liabilities. I've taken 4 numbers from question. Now tell me, there is nothing that I can directly write. Now start from the beginning. First information was current ratio 2.5. Tell me how can I use current ratio here? I know working capital is 1,20,000. Working capital is equal to current asset minus current liability. Ratio is 2.5. So let the current liability be X. Then current asset will be 2.5x. Using this, I can find out total current asset, total current liability. Out of current liability, I already know bank OD. That means the balance can be written as other current liability, or I can even write it as creditors. With that, my current liability will be ready. And I will even get to know the total current asset. But I'll have to find out individual numbers. At least I'll get the total of the current assets. Start. Working note number 1. Working capital is equal to current assets minus current liabilities. Working capital amount is already given 1,20,000. We know that the ratio between these two is 2.5:1. Therefore, if current liability is kept as X, current assets will be 2.5x. Right? This will now be 1.5x. Value of X is 80,000. And this was current liabilities. Out of this, I already know one current liability number, bank OD, correct? So 2 arrow marks, bank overdraft. This was 15,000. Therefore, this will be other current liability, or you can even write it as creditors, 65,000. Correct? This can go to the balance sheet now. Other current liability, working note 1, 65,000. Nothing wrong if you write it as creditors. Now using working note 1, I can even calculate current assets. Yeah. So continue working note 2. Current assets is equal to, what did I write? 2.5x, correct? So 2.5 times of 80,000, 2 lakh rupee is my current asset. I know I can't fill this as it is, but I can write it as a subtotal in the balance sheet. What I will do, go to balance sheet. First item will be fixed asset, and after that, I will list out all the current asset. I will have inventory, debtor, etc., etc. The total I know this should be 2 lakh rupees. Correct? I'm yet to find out those numbers, but I know the total is 2 lakh. Right, sir? Come back to the question. Current ratio was given. We considered that. Next is quick ratio. Tell me, using quick ratio, I can find out stock. Left hand side is 1.3. Current asset, you know. Current liability, you know. You can complete this. Working note number 3. Quick ratio is equal to current asset minus stock divided by current liability. Left hand side is 1.3 is equal to 2 lakh minus stock to be divided by 80,000. $96,000 is the value of stock. One doubt, is this opening stock or closing stock? How do you know? Because this is based on the number in balance sheet, and balance sheet is prepared on the last day of the year. You know why I asked whether it's opening or closing? In the question, they've given one adjustment, last but one line. Closing stock is 10% more than opening stock. That means once I know that this is closing stock, I can immediately find out even opening stock. And why do I need opening stock today? We did not do this in yesterday's class because we are doing trading P&L account. Their debit side, we can fill this as opening and 96,000 as closing stock. So this is in bracket closing stock. First fill it in the balance sheet. This number here, stock, working note to 96,000. Now I can go to my trading P&L and fill closing stock on the credit side. Everybody go to trading account and write by closing stock 96,000 coming from working note 3. Yes, anyway I'm doing stock related workings. I can do even that opening stock part. Come down, continue. Okay, we'll do separate working note. Working note 4. Read the line carefully. They said closing stock is 10% more than opening stock. That means if I keep base as 100, then closing stock is 110. So now the cross multiplication is, if 96,000 is 110, how much is 100? And that will be the opening stock value. Clear? Opening stock is equal to, understand the cross multiplication. If 96,000 is 110, because it is 10% more than opening stock, then how much is the base value? You have to present it this way. 96,000 is 110. How much is 100? 87,273. Hold on before you go back. I think with this I can find out one more number now. You have sales minus GP, cost of goods sold. You calculated opening and closing stock. Missing figure will be purchase. With that, my trading account will be fully done. Yeah, continue here. Cost of goods sold is equal to opening stock plus purchases minus closing stock. Where is cost of goods sold, by the way? Sales minus GP. Sales minus GP. Opening stock 87273 plus we don't know purchases minus closing stock is 96,000. How much was this number? 6 lakh? 6,57,000. I will shift the numbers this side. Plus 96 minus 87273 should give me value of purchase. Anybody? 665 727, the value of purchase, right? Correct. Can we fill this in the trading P&L account? I'll first fill opening stock 87273 and then purchases 665,727. Good to continue. Let's go back to the question. Current ratio done, quick ratio also done. After this, fixed asset to proprietor fund. Very important discussion. Please listen for 5 minutes. After that, once you get this from here, you can complete the answer. Do we know fixed asset number? Do we know proprietor fund number? Proprietor fund we don't know. We know share capital, but fund is not just capital, it is capital plus some reserves and surplus, and we don't know that number. Correct? Then they said net profit is 10% of proprietor fund. We don't even know net profit. So no way we can do the reverse working to get the proprietor fund or even fixed asset number. Then how do we continue from here? Listen carefully. This is an important working note. Okay, in your notebook, once you copy this working note, this note itself you mark as important. Listen, in a balance sheet format, you have proprietor fund here, correct? You have fixed asset here, current asset here, current liability here, and long-term liabilities if you have any debentures, bonds, loans, etc. In this question, I do not see any information about long-term liabilities like debenture, loan, bond, etc. So for this particular case, it is only these two items here and these two items here. Am I correct? Fixed asset, there is fixed asset because they said fixed asset to proprietary fund. There is fixed asset, there is current asset. This side there is proprietary fund and current liability. Now if I put it in formula, it is proprietary fund plus current liability. This total should be equal to fixed asset plus current asset. Simple to understand. I will shift current liability to the other side. Then it will be proprietary fund is equal to fixed asset plus current asset minus current liability. And we know what is the meaning of current asset minus current liability. It is working capital. That means I can write it as proprietary fund is equal to fixed asset plus working capital. Do we already know working capital number? Yes. How much was that? 1,20,000. That means this is 1,20,000 now, correct? And then you come back, it is fixed asset to proprietary fund is zero point 0.6. That means it is 0.6 divided by 1. I repeat, read this once again. Fixed asset to proprietary fund, that means FA by PF is equal to zero point 0.6 by 1, correct? That means if this number is written as X, then this number is 0.6X. Following. Therefore, if I write proprietary fund as X, then fixed asset is 0.6X plus working capital of 1,20,000. Everybody able to follow? There is a 2 in between, therefore fixed asset is numerator, proprietary fund is denominator. Now if I continue, X minus 0.6X will be equal to 1,20,000. Help. 0.4X will be 1,20,000. What's the value of X now? 3. And what was X, by the way? Proprietary fund. Now before I continue, this proprietary fund has two components: share capital and reserve. Go to the question. Do we already know share capital amount? Yes, 2,50,000. So if share capital is 2,50,000, then the balance 50,000 should be now reserves and surplus 50,000. With this, in my balance sheet, after share capital, I can add reserves and surplus 50,000. One part is done. Second, we have just now written that fixed asset is 0.6x, and now that I have the value of x, I can do even that. Fixed asset is equal to zero point 0.6 into 3 lakh rupee. This number is now 1,80,000. This will be filled on the asset side of the balance sheet. Fixed asset is also ready, correct? Go back to the question. Net profit was 10% of proprietary fund. Now that you know proprietary fund, you can do into 10% and fill even the net profit. And in the balance sheet, we have already written current asset total 2 lakh. Now with our fixed asset, balance sheet total is ready. If asset side total is ready, same amount should be written on the liability side also. If you get this one adjustment, you can actually complete the whole answer from here. Done. Did everyone understand this working now? Yeah. First copy this entire working note. Write this as balance sheet pro forma proprietor fund plus current liability is equal to fixed asset plus current asset Copied. Now you can write these numbers in balance sheet. Yes. Go to balance sheet, reserves and surplus 50,000. What was the working note number? 5. And also fixed asset in note 5, 1 lakh 80,000. Since both are ready, you can do the total 3 lakh 80,000. And someone check the liability side is coming to 3 lakh 80,000. And with these two, I can fill one more number, net profit. In the question, they're saying net profit is 10% of proprietor fund. Now that I know proprietor fund, I can fill net profit number. Go to P&L, net profit 10% of 3 lakh rupee. $30,000. Right? Don't fill anything in P&L yet. The balancing and closing is always the last step. You have to see if there is any other item. In some other question, they may give you 10% debenture of 5 lakh, then interest should be debited. Some other question, there may be depreciation. You'll have to debit all available items, then balance number can be taken as other indirect expenses. We still don't know if there are any. Let's go back to question and see what else I can fill. Okay, even this adjustment is taken care. What text? They have given collection period. With this, I can do data calculation. Start. Working note number 6, computation of data. Assuming all sales on credit basis, all sales on credit basis, debtor turnover ratio is equal to credit sales by actual formula is average debtors, but we can't do average since I don't have opening debtor value. I'll take it as closing debtors. They said 40 days, so 365 divided by 40 will give you debtor turnover ratio. That should be equal to sales number. Sales number is there in the question, 7,30,000. This will give you closing debtors. 80 closing debtors. Correct. This can go to balance sheet. Debtor working note 6, 80,000. What else is available? I'll check before I fill it as cash. Working capital we took in the working note. Closing stock is more than opening stock. I think all adjustments are taken. So this has to be cash and bank. The balancing figure. Balancing figure. What's the number? 24,000. This the balance sheet is done. In P&L account, we have GP and NP. We haven't totaled it yet. So if this is 73,000, by the way, how much was this total? 8 lakh 26, sorry, 826 0 This is now 73,000. I don't have any information. Therefore, this 43,000 will be treated as indirect expenses in bracket balancing figure 43,000. Done. Perfect. Question number 14. Prepare P&L account and balance sheet. One more question on P&L balance sheet preparation. GP 15% on sales, net profit 8% on sales, raw material consumption 20% of works cost. When they use the word raw material consumption, this is after adjusting opening and closing stock. Consumption is opening plus purchase minus closing. So this is not purchase, this is consumption information. Direct wages 10% of works cost. Closing stock of raw material is underline 3 months usage. How to understand the meaning of this line 3 months usage? Suppose annual raw material cost comes to 10 lakh rupee. Understand the sentence properly. Annual raw material consumption comes to 10 lakh rupee. How much of raw material am I going to keep with me is whatever that is required for 3 months. So 10 lakh is for the whole year into 3 by 12. That much should be the raw material kept with me. Next, collection period 60 days. This will help me to do debtor calculation. Closing stock of FG is 6% of works cost. Fixed asset is to sales 1 is to 3. This can be understood as fixed asset by sales is 1 by 3. Correct? By the way, observe here, this is not asset turnover. Asset turnover is turnover by asset. But here it is asset divided by turnover. That is why they did not give it as ratio. They gave it as fixed asset is to sales 1 is to 3. Because if they say asset turnover ratio, we will understand this as turnover by asset. But here it is asset divided by turnover. Next, fixed asset is to current asset is 13 is to 11. So FA by CA is 13 by 11. One number if you get, the other one will be cross multiplication. Current ratio given. Long term loan to current liability 2 is to 1. That means if you get one of the two numbers, the other number can be found out by cross multiplication. Capital to reserve is 1 is to 4. That means capital divided by reserve is 1 divided by 4. By the way, capital plus reserve is called shareholders fund or net worth. Finally, the only one number that is available is fixed asset 26 lakh. Now tell me, I've read the whole question. What all can be calculated using fixed asset? Fixed asset to sale, I can get sales. Fixed asset to current asset, I can do current asset number. And once I get current asset using current ratio, I can find out current liability. And once you have current liability, you can even do long-term loan. And once you have sale, go back to the first part, you can do GP, you can do NP, and you also have collection period 60 days, assuming all sales on credit basis, you can even do debtors. That means you already know first 3-4 working notes. And question is to prepare P&L and balance sheet. So I'll have to start with the trading P&L format. Available numbers we will fill. The numbers that are not there, we'll have to do working notes one by one. Yes, start. Heading trading and P&L account. particulars amount in rupees. Is there any number that I can fill directly in P&L? No, the only number available is fixed asset. From there I can start filling one by one. Now the next question is, how much of space do I have to keep? See, on the credit side we have sales, debit side there is GP, and then there is NP. And once you have GP, sales minus GP, you'll even have cost of goods sold. And once you have GP and NP, in between there may be indirect expenses. That means you need at least 10 to 12 lines to complete trading P&L and balance sheet. Okay, leave 10 to 12 lines and then start with balance sheet. Liabilities amount in rupees, assets amount in rupees. Is there anything that can be filled in balance sheet directly? Yes, fixed asset on the asset side. First item, fixed assets as it is, I can copy 26 lakh. Done. Now I'll go back to the question, start from the beginning and start filling item by item. If I go back here, GP, NP I can't do, RM consumption, direct wages, closing stock, collection period, for all of this I need sales and cost details. Closing stock, fixed asset is to sales is 1:3. That means my working note 1 will be to find out sales. Fixed asset is to sales, so I can do fixed asset by sales, and ratio is 1:3. That means this is 1/3. This should be equal to, fixed asset was 26 lakh, this by sales. Cross multiply, sales will be 78 lakhs. Before I do anything, go back to the question. First line itself you had both GP and NP. You can complete it here itself and fill it in P&L account as well as in trading account. Here itself you do. Therefore, GP is equal to 15% of 78 lakh. NP is equal to 8% of 78 lakh. Anybody? 15% of this? 1170 and 6 lakh 34 24. Right, let's go back to P&L and fill all these numbers. Credit side by sales, working note 1, 78 lakh. Debit side, leave 2 lines, 2 lines at least, and then gross profit coming from same working note 1, 1170. This GP will come here, and we have also worked out NP number, same working note 1, 6,24,000. Now, don't do totaling balancing now. We may have some more items. We'll do that at the end. Answer. Go to the question. GP done, NP done. After this, if you see, 2-3 items are related to works cost. I can see RM consumption, direct wages, and later even closing stock of FG is 6% of works cost. Now, do we use the word or term works cost in trading P&L account? Where do we use the word works cost? Cost sheet. Still remember cost sheet? Very good. How do you reach works cost in cost sheet? So first three, direct material labor expense, will give you prime cost. After that, factory overhead, that will give you gross factory cost. You adjust what? Add opening WIP, deduct closing WIP. That number is what? Net works cost. And when they simply say works cost, they're referring to net works cost itself. Now leave the WIP part. If you see the cost items that you have taken, direct material, direct labor, direct expenses, and factory overheads, this is nothing but debit side of trading account. If you remember, in trading account, you used to take fuel, heat, gas, water, etc., etc., which means works cost here should be understood as items to be debited to trading account. Now, in simple, items to be debited to trading account is nothing but sales minus gross profit that you have already written in Calci. How much was sales minus gross profit? 66 lakh, 30,000. This should be nothing but your total items to be debited to trading account. Under this, now you see they have said raw material is 20%, direct wages 10%. That means whatever 66, 30 that you are saying, in this there is some material cost 20%, there is some wage cost 10%. Sir, what is the balance 70% now? What should this be? You can have only three items: material cost, labor cost. Third should be expenses and factory overheads. So you can treat it as expenses and factory overhead. With this, my direct material is ready, direct wages ready, and factory overhead will be the balancing figure. If we have enough space in my trading account, there itself I will have to show material consumption cost, labor cost, factory overhead cost. If I don't have, I will write only one word called works cost there, and that works cost breakup I will show separately in a working note. If you have space, you write here, otherwise you write it as 2 works cost, and then we'll show the breakup separately. In bracket, working note number 2. Yes, let's do working note 2. Sales minus gross profit is equal to works cost. This is sales was 78 lakhs minus GP 1170, 66 lakh 30,000. Right. This should have three components: material consumption cost, direct labor cost, and factory related expenses, not indirect expenses. I'm referring to GP, so it's only trading account items. Raw material cost, they have given in the adjustment that it is 20%. Anybody? 1326,000. Direct wage cost is 10%. 663,000. Balance should be considered as direct expenses and factory overheads. ₹46 lakh, 41,000. Done. Yes. They're discussing something important. Sir, am I disturbing you? Those who are discussing something very important. Am I disturbing you? No, no. Okay. You can continue with your permission. Yes. Afternoon 3 o'clock class, I keep my audio very low. Normally mine is low. I keep much lower because I shouldn't disturb someone after heavy lunch when they come to class at 3 o'clock. You don't know in what zone they are in. If I talk too loud or disturb them, it's a problem. Therefore, can I, sir, continue? Yes. Now, those who have space, you can fill this in the trading account itself. Otherwise, we can write it here. I have one doubt. When we say raw material is 1326,000, is this raw material purchase or raw material consumption? Remember, consumption is the cost, purchase is not the cost, because purchased raw material can be returned also. Consumed raw material cannot be returned. That means this number is after doing opening stock of RM plus purchase minus closing stock of RM. You don't have to now show closing stock on the credit side of trading account separately. Correct? But do we have some closing stock of raw material at the end of the year? Yes. That means it should be shown in the balance sheet. You don't have to show it in the trading P&L account. Yes. Let's go back to the question. Where are we now? GP done, NP done, RM consumption, direct wages. Closing stock of raw material is 3 months usage. We can do that now. Working note 3. Closing stock of raw material is equal to 3 months usage, they said. Tell me, what is this 1326,000? Annual consumption, correct? And whatever is required for 3 months, you will have to keep it with you. So into 3 by 12. 331,500. If you read the question carefully, there is one more closing stock to be taken. When I prepare balance sheet, this is not the only number. There is closing stock of FG. Continue here itself. Closing stock of finished goods is equal to, what did this, 6% of works cost. That means it is 6% of 66,30,000. 397,800. This total should go to balance sheet as closing stock. Anybody? 729,300. Why am I not taking these in trading P&L? Is this is after the number in the trading P&L debit side is after adjusting all of this. All good. Write this in the balance sheet, 729,300. Go to the asset side. After fixed asset, you can now write inventory What's the number? 7 lakh 729 300. Done. I'll go back to the question. Raw material data taken care. Collection period is 60 days. With this, I can work out data. I'm not given cash and credit sale breakup, so we'll have to assume that all sales are on credit basis. Start working note 4. Assuming all sales on credit basis, debtor turnover ratio is equal to credit sales by, we can't call it as average debtors, we don't have the information, so this should be closing debtors. How to do DTR, by the way? 365 days divided by collection period of 60 days should be equal to 78 lakh sales by closing debtor. 12 lakh 82 192 1282 192 1282 192 were debtors. Let's go back. Fixed asset is to sales is done. Fixed asset to current asset we can do now. Now out of current asset we already have two numbers. Balance will be other current asset, or you can write it as cash and bank balance. Easy working note. Go ahead, do this. Working note 5. Fixed asset to current asset is 13 by 1, 13 by 11. It's 28 lakh or 26 lakh? 20. Here I'm asking FA. 26 by current asset. I think this will be 22 lakhs. Under this, you already have two numbers. You have calculated inventory, you've calculated debtor. So this can be written as other current asset. You can even write it as cash and bank balance. 729 300 1282 192. Anybody? 188 508 the cash and bank balance. Correct? One double eight 508. I'm writing here. This is my cash and bank or other current assets. Before I continue, there cannot be anything other than this on asset side. Therefore, I can do this total, and that will be the total on the liability side also. 48 lakhs would be the total here. Now go back to the question. Fixed asset to current asset done. Current ratio is available. You can do current liability with this since we already have current asset number. Easier. Working note number 6. Current ratio is equal to current asset by current liability, that is 2 by 1. This is 22 lakh. Therefore, this should be 11 lakh rupees. Please listen for a minute. If you have done till 11 lakh, everybody, give me 2 minutes to explain. After that, you can. Now, go to your balance sheet. Nothing doing, just check and tell. This 11 lakh, if you write on the liability side. Now, total liability is with you 48 lakh. In that minus 11 lakh, the balance portion should be share capital, reserves, and long term debts, if any. Correct? Now, go back to the question. Here they have given long-term debt to current liability is 2:1 and capital to reserves and surplus is 1:4, which means I have capital, I have reserves and surplus, I have long-term liability also. The only number I know is current liability, just now you calculated, which means once I get current liability, using this 2:1, I can do the long-term liability. Now out of total liability, if I have short-term liability, long-term liability, balance should be shareholders fund. In that, capital and reserve, two arrow marks, 1:4. So 1/5 will be capital portion, 4/5 will be reserve portion. With that, the liability side is done. Did you all understand? Let's do it now. First, write this 11 lakh in the balance sheet. Here, current liabilities. Now the working note number 7. It says long-term loan to current liability is equal to 2:1. Therefore, long-term loan by 11 lakh, if you cross multiply, you get 22 lakh as long-term loan. Now I'll not go to balance sheet. I'll do the working note 8 also here itself. Tell me how much was total liabilities? 48 lakh. In that, long term is 22 lakh and short term is 11 lakh. If I minus all of this, the number I get should be my shareholders fund, and that is what 15 lakhs. This is my shareholders fund, and this has two components, correct? Capital and reserves. That's in the ratio of 1:4. So it is 1/5 and 4/5, 3 lakh and I think with this my balance sheet will be done. Yes, capital 3 lakh, reserve and surplus 12 lakh, long term debt 22 lakhs. You write all the working note references in bracket. Balance sheet is done. What about the trading P&L part? I think we have completed the trading account part already. This was 78 lakh minus this 66 lakh 30,000. This portion is done. And now the only thing to be done is GP and MP. Numbers are already there. We don't have any specific expenditure. You know what should have been done in this question? They said there is long-term loan, but they did not give me rate of interest. If they had given say 5%, then I would have applied 5% on long-term debt, and that should be debited to P&L account. They have not given, therefore I cannot debit any interest. Later today, in another sum, you will have even the rate of interest, then in that case I will debit the interest. As of now I can't, therefore this difference I'll have to take fully as indirect expenses balancing figure. 1170 minus this 5 lakh 46,000. Doubt? Yes, sir. His doubt is, sir, why the stock numbers are not taken in the trading P&L account. Now, sir, when I say works cost, as per the cost sheet, net works cost comes after you do factory overhead addition, opening WIP, closing WIP, you get net factory cost. What comes after net factory cost? Can somebody continue that cost sheet format discussion? After net factory cost, what do you do? Office and administration overhead if related to production. If that is not given, then net factory cost itself is cost of production, and then you add opening FG, deduct closing FG, and that is what you call as cost of goods sold, and that number itself is works cost in this question. Correct? Now, why I did not write closing stock of raw material, closing stock of finished goods on the credit side is, number one, when I say works cost in this question, it is actually cost of goods sold, because in trading account there is no term called as works cost. In accounts class, when did we use the word works cost? We use the word cost of goods sold. And in cost sheet, when will the works cost be equal to cost of goods sold? When there is no office administration overhead related to production. Nowhere in the question they gave that number, which means works cost itself is my cost of goods sold. But sir, there is closing stock of FG that could have been written. If I write closing stock of FG, you know what will happen? Closing stock of FG number will increase the total, correct? And GP is already written. This total will be 78 lakh plus some number. That new number GP cannot be changed because it's a percentage on sale. Sales minus GP will be works cost that is already written. Then what will I call that missing figure as? I will have to then consider that as opening stock. Opening stock of which number? Not raw material. Why not raw material? Because this works cost 66 lakh 30,000 has raw material 1326, and this is raw material consumption. That means this number is after adjusting opening RM and closing RM. That means this opening stock has to be opening stock of FG. And you know how much that number will be? Same number that you have written here. What did we achieve? The reason why I did not write is, even if I write, I will end up increasing the totals of the trading account by same number both the sides. I hope it is clear, sir. But then why did I write it in the balance sheet both closing of RM and closing of FG? Because it's an asset on the last day of the year, you will have to show. Therefore, I have taken closing RM and closing FG both put together as 729. Clear, sir? So if I take it, nothing wrong, but that is not necessary. I'll have to write it here. Say some 3 lakh and odd was FG number. This 78 lakh will go up by another 3 lakh. Then this side GP is already filled. Works cost is already filled. I'll have to then assume that this was opening stock of FG and write the same number once again. Will not serve any purpose. Done. Good question. Anything else? No.